following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so
I've
much.
been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that is not the love that will make you happy. What will make you happy is to share all the love that you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials up 147, NASDAQ up 30, S&P's up 13, gold contract down $10.40, traded at $1,333 an ounce. Silver down 9 cents at $20.31 an ounce. Platinum up $2 at $1,099 an ounce. Copper up flat at $2.23 a pound. Light sweet crude up 74 cents at $45.49 a barrel. Bonds, you have the 10-year down 14 ticks, 132.12. 30-year off 2 points, 173 even. King dollar down 123 ticks, trading out at 96.08. You have the euro trading at $1.11, and the yen is at 105. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the cash S&P. We're at 2168. You go, which is over the May highs of 2015. Took those out a few days ago. We go over to the SPY. The SPY's laying out there at 216.34. You got a small ABC up Kevin turned us on to yesterday. Bottom line is that this wants that price projection is approximately 218. That's where I expect you're going to see that baby go. NASDAQ Composite, different animal with the composite now. Composite's still weak. I expect you're going to get somehow we're going to get higher, but bottom line it's weak. You're at 5,039 right now. You're up 33 points, and we'll see what it can do tomorrow. But it looks to me like this wants to tag the 5116. So that's you're talking about 50 points from where we are right now. I'd love to see it actually tag it tomorrow. The reason being is that when you have an up week like we've had, I don't expect you're going to pull back on a Friday. Just doesn't fly. So this thing wants to get tested. Gold contract. What do we have with gold? Gold, folks, is doing a small ABC structure on the way down. You broke the B point out here today. We broke it with volume. The B point that we're talking about is 1331. We had volume of 257,000 contracts there. Well, it's going to be close, actually, because we're 248,000. I suspect what you're going to see more than likely in an hour, though. Hey, we'll find out in an hour whether we do 9,000 contracts. I suspect that you probably can, though. Hey, we'll see. Bottom line is it broke the B point, which is 1331, and thus far we have some juice behind it. That price projection would be the 1304. Silver hasn't broke. Bottom line, silver keeps rejecting lower price. Did it out here today. 59,000 contracts out here, which is light volume, by the way. So silver's hanging up there. Bottom line, we'll see whether it does want to break down or just build some more cars and go sideways. Bonds. What do we have with the bond market? Bond market goes south. 30-year bond up here. We've done 1.2 million contracts out here. The It's 1.4 million to confirm the ABC structure on the way down. It has taken out the 132.11. We're going to 132.06. We're trading right to 132.11 right now. What I suspect we're going to see is this. The 10-year bond wants to go back to where it started from on the 24th of June. That number is 130.21. I suspect it's going to back down with light volume, but that's where it looks like it wants to go. The 30-year, a little bit different on the 30-year. We're down 2 full points, and you do have juice behind the move. We've done 270,000 contracts, which is big numbers. It's broken a swing point of 173.07. It doesn't look to me like you're going to do another 30,000 contracts. And this is what the difference is. On the 24th, we went from 165 to 173. Well, we're really right at 173. So the 30-year has a chance to reject the top of that level. If we get down another point tomorrow, then it's going to say that, hey, guess what? This 30-year wants to run down into the 165. And that, for the 30-year, that would be a big move lower. King dollar. What do we have with King dollar? Let's go take a look at King dollar. King dollar continues to reject lower price. With lighter volume, King dollar, folks, wants to break topside. And it's kind of like, wow, what is going to have King dollar go break the highs of June 24th? June 24th, that's when King dollar went from 93.76 up to 96.70. We haven't backed off that area, and it's been trying to basically, well, they're trying to sell it off for 2 weeks each and every time. Volume's way too light, keeps rejecting lower price. And the longer this happens and it stays at those highs, is the higher probability that we're going to go up to where the downdraft occurred on February 3rd. And that number is 98.91. So that would be quite, that's 2,000 ticks on the way up. And that's where it looks to me like that baby does want to go. We go look at the oil contract, what we have out here with oil right now. Oil is trading at 45.49, and the volume's not bad. It's a sideways move. So what's holding oil up, folks, is 44.09. 44.09 was the high of March 18th. It was a trading range that we were in for approximately from March 7th over to April 19th. That's what seems to be holding oil up at this particular point. Inside the Dow Industrials, the strength versus the weakness is what you have. The strength out here today is Goldman Sachs. That's up 3.2%. Apple's up 2%. Apple's caught a bid. You know, hey, let's go look at Apple, because Apple comes out with the numbers at the end of the month. Apple's taken out a small B point, and it looks like it's gonna have the volume. It's gonna need another 500,000. You get another 500,000 on Apple, you get a small A point out here at 91.50. The B is 97, so you get $6. You see is 96, so you're talking 102. That's how that's set up. Now, the gap, where Apple had last gap that it gapped down on the last earnings, is 104. So it looks to me that Apple, good old Apple, will make a run up to that level. Apple doesn't come out with its numbers until the 26th of July. We go take a look at the NDX 100. Strength versus the weakness, this is what you have. eBay's the strength inside the NDX today. That's up 4%. American Airlines is up 4. Liberty's up 4. Taken away from it, you got, let's see, Norwegian Cruise Line is down 2.3. Seagate is off 1.7. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow up 149. You get the S&P's up 13. Nasdaq's up 33. J.P. Morgan. Let's go take a look at J.P. Morgan. They come out with the numbers at 6:45 this morning. It's up $1.29. And what you have is that this little baby is going after with $64.44. The low of the high is $64.92. We've hit $64.98 today. That's what I expect. It's going to basically tag the top of that high. If we take a look at what they were saying, this is what you have inside. Come on, baby. There she is. Where is it? There it is. Okay, so earnings per share were $1.55. They put in a $1.4 billion for their credit losses. That's just a little side kitty going on. Their trading revenue, the estimate was $3.57 billion. They took in $3.96 billion. That's a big number on top of the estimate. So they're making some money in that trading revenue on the spreads. The managed revenue, the estimate was $24.5 billion. They took in $25.2. That's over. The provision for the credit losses, they did put in, let's see, another $200 million more. No, $120 million more than was estimated. Their net margin interest, they're making 2.25% on that. Their investment banking, the estimate was $1.49 billion. They made the $1.49 billion. They returned $4.4 billion to shareholders in the second quarter. So banking earnings, J.P. Morgan just kicked them off. You take this and you put this on a weekly chart. What you're going to see is that you're coming into the downdraft of August of 2014 as well as September, and you're coming into that area, let's see. It looks like it's going to be lighter volume. You know, we're dealing with 114 million. Yeah, it's going to be lighter volume because we've already done, we only have one more day left, and it's counting the volume from today, and you're only at 71 million. But what I do expect is that you're going to get into the bottom of this gap, which is the $65 and the 71-cent area. We go over and we take a look at the rest of the banking sector. Well, actually, let's go look at Goldman Sachs, because Goldman Sachs is the leader inside the Dow Industrials today. Goldman comes out with their numbers the 19th. So next week, Goldman comes out with the numbers. Goldman's also got a bid, so Goldman wants to go to the top of the range also. We're at 162.94. Top of that range is 165 to 168. We bring this back, and man, these banks have taken some hits. This equity's down from 218. So where Goldman's going, Goldman actually 172. Goldman could actually get to 172 on this run. 172 and Goldman is ice. That's how that baby's set up. Bank of America, let's go take a look at Bank of America. They come out with their numbers on the 18th also. So the 18th is going to be a big day. Now, Bank of America hasn't caught a bid. We're up 26 cents. That hasn't got to the gap down yet, you know, from the 23rd. And the volume is dying on the vine also. So that there's a differential in between Goldman, J.P. Morgan, and Bank of America. We go take a look at Morgan Stanley. Morgan Stanley is trading up 86 cents. They come out on the 20th with numbers, and that's intriguing. So Morgan Stanley's right at the highs that the rest of them are trying to get into. 28.29, and we'll hit 28.08 today. Oh, this is going to be cool watching this thing shake out. So, yeah, this can go higher too. This can go, this 30 bucks, $30.40. That's how this baby's set up. It's getting out. Looks like it wants to get up to ICE, and ICE there is 31.70 to be exact. Some of the higher volume stocks in this low volume market, because that's what we have out here today. Second, do a different screen up here. There we go. Okay. So we take a look at some of the higher volume stocks in this low volume market. This is what you have. Chesapeake Energy's up 11. You have Apple up $2. That's caught a bid. Citigroup is up $1.20. eBay's up $1. Alcoa's up 26 cents. Delta is up 135. Let's go take a look at some of the airlines out here. So Delta's up 135. What's pushing that baby? This is Delta cuts back growth plans as supply glut weighs on fares. Well, bottom line, cutbacks, you cut back and the stock wants to go higher. This is an equity, though, that has come down fast and furious. It's come down from 50 bucks 3 months ago to 32. This is a dead cat bounce. Yeah, you're coming up to ice on this baby. The XLE. Let's go over to the gas and oil and gas sector. XLE is hanging at the highs. You know, bottom line, this indice looks to me like it is almost ready to sell. It's not there yet, and what I expect we're going to actually see here, folks, is this: is that the way the market is set up is that the SPY wants slightly higher price. That's good. The Dow, that'll go up with it. The NASDAQ is the weak link here. The larger NASDAQ stocks are going to be coming out the week of the 25th to 27th. What we will see, though, is the 19th, which is, let's see, 15, 16, 17, which is next Tuesday. Is it after the close? Let's see. Yeah, after the close at 10 past 4, Microsoft's going to be coming out with their numbers. Now, Microsoft is trading at $53.80. That looks like it also wants to fill the whole gap, which is $55.41. This is going to be a beauty to watch. The reason being is that Microsoft has also been in the same consolidation since October of 2015. And each and every time that it gets up into these higher levels, even the 55 level, it just has given it up on spades on the way back down. It looks to me like the same thing's going to happen. The reason I'm saying is that you're going into a downdraft that had 255 million shares. Last week, counting the July 4th, day, because we did 120. So you can see 120 versus 255. It's a huge problem. We've done 92 thus far. So we're going to do somewhere about 120 again, getting into that bar with 255. That doesn't fly. That's a huge problem. That distribution is happening. That's how that shakes out. Big Blue. Let's go over and take a look at Big Blue. IBM. IBM is trading up 257. Now IBM's also coming out with the numbers on Tuesday. We take a look at IBM. Now, this has been a one-way trade and a way down. IBM looks to me like it's so many of these equities have come up to where they got croaked from. The number for IBM, check this out, is $161.10. That is where it gapped down from the last time it came out. No, October of 2014, actually. Wow, amazing. But you're talking about vicious volume. You're talking about 69 million shares. And with a good week this week, we've only gone up with 13 million. Yeah, big numbers. You stay right there, folks. We'll be coming right back. And, of course, after the close out here at 4 o'clock, and it's 3:30 now, we're going to be having more numbers for you because, you know, little by little earnings are dribbling out. Next week, it's going to be a fire hose coming out. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 152. You get the NASDAQ up 34. S&Ps are up 14. Let's go over to the Dow Industrials. We take a look at the Dow. It's right at its highs. You know, if we pull this back, let's pull this back, go back to... So you've taken out the 18,351, and now you're over this almost by 200 points. That correlation, let me just look at something here. Yeah, that's pretty cool. So this correlation inside the Dow would give the Dow, let's see. So 17,063 is a small 8 point. That'd be the lows that were established out here on the 27th. The B point is 18,002. It's a big number, man. So you're talking like 900, more than 900, 17,713, 3196. Oh, we're getting close. Okay, I'm gonna get that exact number for you. But let me pull this here. So the correlation 7.1, and we took that out 7.8. So let's see what the volume looks like here. What we're looking at is July 1st versus July 8th. So July 1st, you did 856 million. July 8th, you did 931. So just as the small S&P did a small ABC up, the Dow Industrials did also. And that is saying that the Dow has about another 150 points to go up. And so the kicker here tomorrow is that what I'd like to see is those babies finish those off. Because then what you have, that finishing that off, the bonds, I'd like to see those simultaneously finish the ABC off on the way down. What we do have, if we take a look at the TLT, the 20-year bond fund, what you're going to see is that, yeah, you definitely haven't taken the B point out on this. This bond, the TLT has just gone from 143 bucks to 139. What it's done out here today is, yeah, just moving sideways. The support on the TLT right now, because of the way that it went topside when it had on the 27th. No juice yet, you know, but I suspect we'll see whether that's going to take the next leg down. Because on the way up, the TLT was 132 on the 23rd, the day before Brexit, and then just went straight up to 143. What we had out here this morning is that the market this morning was actually waiting. Well, the currency markets were waiting for the Bank of England to go down on rates, you know, because of Brexit. Bottom line is that it's pretty amazing. I thought it was pretty amazing anyway that the market was thinking that they're going to go down when it just happened. Bottom line, no movement. No movement because guess what? Rates are already low. The Bank of England's already at 0.50 of 1, and they just don't have any information yet about how Brexit will affect that economy over there. So when we take a look at rates still, we're at a 1.5 on our 10-year, and that 1.5, even though that's a low rate, is a very inexpensive rate when you look at rates across the country. You know, as I had said yesterday was the first time, folks, that in Europe that actually a 10-year bond, it was the Bund in Germany, was sold at a negative rate. Now, Europe has been in negative rates for a while. You know, the difference is that was negative rates of bonds that had already been issued, not new issue bonds. So it's pretty amazing when you issue a new bond and you don't pay interest, they pay you in order for the right to get their money back in 10 years. That's what that is. So, I mean, that's what's just so amazing about just trying to get your head wrapped around that. That you are saying to another person or company that I want to borrow money for 10 years. And instead of you paying them interest, they pay you interest for the right that they can lend money to you and that they will get their money back in 10 years minus a certain fee, because that fee, that's what negative interest rates is all about. It's just pretty amazing. So when that happens, of course, what has to happen is that you have to have a place to place that money. And that's what's going on, you know, in the world out here today. That the amount of risk that people want to take is nil. That's what that, when you break that down, that's what that is. So if you can figure out some way to make more than the interest rate that you're going to pay, guess what? It's a beautiful world. And it's absolutely wild, man. It really is. So there's a question in the den. So they make money on loans and deposits. So why are the European banks doing so lousy? Okay, so check this out. This is pretty cool, man. Okay, so the correlation okay, goes like this. Now, wait to hear this. This is where this gets really wild. Let's picture that all of us have taken out a mortgage, and the mortgage is a short-term mortgage. Let's say a 10-year mortgage, or a 15-year mortgage, and it's a variable rate mortgage. Well, what has happened? So this is really wild. What has happened in Europe is this. Instead of, now we have mortgages on our house. Let's just say it's $100,000. Okay, $100,000. You get a mortgage. You get a variable rate mortgage on your house. So instead of us paying, in fact, here, I'm going to bring up almost a real example. I'm going to bring them up. Okay, so I'm going to take up the 10-year, and I know this. Okay, so this is happening in Sweden, right? So let me put this up in Sweden for a second. So Sweden right now is 0.1% on a 10-year bond, right? So check this out. So the year rate in the last Sweden, let me get Sweden up again. Okay, I'm gonna put this back where the spread was for the last year. So the spread in the last year in Sweden has gone from the low was 8/100ths of 1% to 1%. That's how much it's gone down. So it started at 1%. Now it's at 16/100ths of 1%, but it was low as at 8. Well, if you had a variable rate mortgage, what would happen is this, is that instead of you paying the bank, guess what? The bank is paying you. So that's why the European banks are in tough shape also. Isn't that amazing? It's crazy. I mean, it's so weird thinking about it. Now, that's on the interest. It's not on the principal. You're still going to pay the principal back. But what's going on, of course, is that as the banks are paying you back on a negative rate, well, you put it right to the principal. Okay, so you're reducing your principal, on a continual basis. And if rates go too much lower, what's going to be really wild here is this, is that in a correlation, I believe Sweden and Netherlands, if they go down about another 1.5, what will end up happening is that their mortgages are very inexpensive anyway. What would happen is that negative rate would actually pay down the whole principal. How's that for the term structure? Twisted, man. 877-927-6648. Dow right now is up 143. Nasdaq is up 31. S&Ps are up 12. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Volume-wise out here, what we're going to have is this, is that right now the NYSE is at 600 million. Let's say it's going to come in about 850 on the NASDAQ Composite. The composite's laying out there at 1 point. Oh, this is going to be interesting. So the composite's 1.367. And you can get to 1.65, but 1.65, man, is really a contraction of volume, a big contraction of volume, too, of where it should be. So we'll see where that shakes out at the 4 o'clock hour. If we take a look at the SPY, the Qs have 18 million shares traded. You're at the $111. That's going into the last high that was out here was 42 million. $111.44. So you can see the correlation is pretty intense. We bring this back. That being said, I suspect that the Qs somehow want to get to this 114 level. Where I'm going with the 114, that was the top of January where the downdraft started. The 111.46 was the top of August of 2015 where the downdraft started. So both of those numbers are important to keep your eye on. We go over to the Russell 2000. We take a look at the Russell 2000. What you're going to see in the Russell 2000 is that we're at 1204 right now. Let's see this. Bring this back, and yeah, so 1205 is the swing point it's going after. Now, this is going after with dramatically lighter volume. So it's pretty cool. We'll start putting these together tonight, tomorrow, because these are the points that if the market, meaning the NASDAQ first, is going to fail, you'd like to see the small caps also fail at the 1205. Because if the small caps don't fail at 1205, then you're talking another 20 points higher, which is a lot for the small caps. So that'd be a number saying, okay, man, guess what? That as we go into date-wise into next week, let's just look at this for a second, because what you have is so next week is the 18th to the 22nd. Yeah, see, inside the NDX 100, it's the 27th, 28th that the big numbers are out there. Let's go to the IBB. So the IBB, that came down with volume yesterday. You're going, hey, look at this, and it rejected lower price today with lighter volume. So that's not done either. But let's go AMGN. Let's take a look at when some of these numbers are coming out. So Amgen's coming out on the 27th also. Monster biotech stock. Biogen's coming out on the 21st. Well, that's good. Celgene is coming out on the 28th. REGN. Regeneron is coming out August 4th. If we take a look at what brought the biotechs down off that 400 bid, was Biogen. Biogen was the first one to implode inside the biotechs. Biogen in March of 2015 traded at $480. It goes straight down to $223. It's, you know, quite a run. And it doesn't look to me like it's going to get off this bottom at all. Not even close either. You know, because when you take a look at this on a much larger basis, it's trading where it was trading in 2013. You know, when you get a run that's so extraordinary, it's like, okay, man. The sick thing, with Biogen, man, and some of these is like, I can make a case that Biogen wants to go down to $106. Where it's going to be bizarre. Let me go to Amgen, AMGN. So Amgen is trading 162.82. This is still at highs. Yeah. You know, Amgen hasn't got hit. This thing broke topside, let's see, October of 2014. And it's still at a high-end consolidation. And the volume's not that bad. Well, this month is disaster. It's going up on nothing. But it's going to be hard to break this down under 144. Right now, you're at 162. We go take a look at Celgene. Celgene's at 101. Okay, so Celgene's a problem. This is also high-end consolidation. It's been trading the same place since October of 2014. The low of that was 83. The high of that it did spike 140, but realistically the high about 128, 130. And where you can see was a problem, there's two separate places. The first one was the downdraft of January of this year, and then we actually went lower. We had higher volume and tried to get into that level last month. And now what you're doing is you're coming back up with lighter volume. So I suspect what we're going to also see is that the biotechs themselves more than likely are going to put some heavy selling pressure on the composite. If we go over to the transports, we take a look at the transports. Transports are trading up $85 today. You're at 8,015. The high that we're talking out there is 9,300. So the transports right thus far only coming up to ICE, and that's normal. The NYA, which is the full amount of equities plus bond funds that trade inside the New York Stock Exchange, that high out here, let me see this, whoops, there we go. So the high that we're dealing with out there is 11,254, and right now you're at $500 off that high. The way this is trading, though, see, I can see this getting up to 10,916. So that's another 116 points higher. Let's go look at Google for our man Mitch in Boston. So Google's trading up 574. They come out with their numbers on the 28th of July. And this looks to me, now this is weak. Google's weak. We got into, though, the $730. And this is where Google broke down from. Google, last time I come out with numbers, it closed at $780 and then opened the following day at $743. You're at $735, so Google is saying that it wants to try to test like the $745 to $753. So if you're looking to sell that baby, Mitch, I would let it get up into that area first. Google is one of the large equities that, looking at it, I'm trying to figure out, like, okay, the weighting structure in Google is going to hit the NDX 100 because Google's really weak. What I'm trying to figure out is that is this going to be another dynamic change inside the marketplace that actually Facebook has taken so much money away from Google? Well, we're going to find out, man. I mean, it's pretty intense because Google hasn't been able to move. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials up 146. NASDAQ is up 31. S&Ps are up 12.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You get Big Mac is trading up $1.17. You get ExxonMobil up 6. Citigroup's up $1.14. We have GE up 29 cents. Walmart is up 8. You got Amazon down $1.50. Let's go over to Amazon. So Amazon had the Prime Day. Amazon's laying out at highs here. Rejecting lower price. Oh man, Amazon wants to go higher. This is crazy. So let's, when is Amazon coming out with numbers? Okay, Amazon comes out the 21st. So right now what you have is that Amazon is $741. On Monday, let's see, today's Thursday. So on Prime Day, Amazon made its high. $757.34. And guess what? We have some volume at that high. We did 5.6 million shares. Today, it's backing down with 2.1 million. It has rejected the lower price thus far. The lower price on Tuesday rather, was $740.33. We're at $740.77. We did trade to $739.02. And you can see the dramatic difference in volume as you back down. As we back down, you back down with 2 million shares versus the 5.6 million. If I put this on an intraday chart, and you can see how this lined up, it's lined up pretty cool. Let me bring it back 5 days so you can see it. So intraday, what you have is this. On a 10-minute, check this out. This is pretty sick. On a 10-minute, we did 595,000, and then that backed into that with 92,000. And now it's backing into that right as we're talking here with 51,000. So when you put this together, it's like, oh, you're going to be kidding me. Is Amazon going to come out with numbers on the 21st, blow things away? Because when we let's put this up on a larger issue. You know, this is crazy. So let me put this. I'm going to put this on a 5-year weekly. So then the case is going to be, let's see, 679, 574. My God, is Amazon going to go to 8? That's $200, right? Yeah, 874. Yeah, I could do it. 874. 874 would be a gap up of $130, and Amazon certainly is capable of that. The amount of money, let's see. So Amazon right now, this is pretty, you talk about gross figures, folks. So check this out. This year, 2016, Amazon plans on taking in $134 billion. If we just go back 2 years, in 2014, Amazon took in $89 billion. So here's the numbers for 5 years. This is, when you talk about growth, check this out. In 2012, Amazon took in $61 billion. In 2013, $74 billion. In 2014, $89 billion. In 2015, $107 billion. And this year they plan on taking in $134 billion. And then next year, $162 billion. You can see what's happening. What is really crazy is this. Percentage-wise, you know, it's the same percentages. But what happens, of course, is that when you're taking a percentage of a much larger number, it's like you are coming up to some numbers that are pretty outrageous. Now, that doesn't mean that they've made a fortune. You know, the earnings is that this year, last year they made $1.25. This year they, well, no, it's big. Let's look at this one. Last year was $1.25. This year they expect to make it $5.47, and then next year they're almost doubling it to $10. So you're talking about a big number. You stay right there, folks. We'll be coming back with some numbers after the close. Dow right now is up 143. You get the Nasdaq up 29. S&Ps are up 12. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, you know, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Miracles happen when you forgive. You are born with the capacity to forgive, but you learn the opposite behavior. You learn not to forgive, you practice not to forgive, and you master not to forgive. When you learn to let go of your pride and ask for forgiveness, miracles start to happen in your life. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 134, Nasdaq up 28, S&P's up 10, gold contract down $9.70, trading at $1,333 an ounce. Gold broke a B point. We'll see whether we broke it with volume. ABC structure on the way down. Silver still didn't break. Silver's only down 9 cents, $20.31. Platinum up $3.50 at $1,100 an ounce. Copper flat at $2.24 a pound. Light sweet crude up 73 cents, trading at $45.48. You have the bonds. The notes were down 16 ticks, 132.10. Bonds were off a full 2 points, 172.31. Both notes and bonds, they got into a B point, didn't have enough volume, but it looks to me like they still want lower price. King dollar. King dollar down 88 ticks, 96.12. Now, a King dollar is done for 2 full weeks, folks. Is back down, lighter volume each and every day. It's rejecting lower price. King dollar looks like it wants to break topside and get into that 98 area. The 98 area is still a dead cat bounce, but what it is, it's the 98.80, and that's the downdraft. That was the last downdraft that we had inside the dollar. That's where that occurred. So we did, in February, you came down hard. You made it all the way back up to March 10th. March 10th, you gave it up both at the exact same price point. That's where it looks like King dollar wants to go. The euro is trading at $1.11, and the yen is at 105. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so the SPY is trading out at a price point of 216. It looks like that thing wants to run up to the 218 area. Where we're getting at is at a small ABC structure on the way up, and that's where that baby looks like it wants to get into. Dow Industrial, same test setup in the Dow. What you're talking about where in a Thursday of a week that each and every day it's going up, you get summer trading, meaning Monday, Fridays are always slow days in the marketplace. You can push it around. I expect you're going to probably pick up another 134, 140 points tomorrow inside the Dow. NASDAQ composite out here, different animal. Up good today, and I do expect you're going to get more up in the composite tomorrow. It's dying on the vine, though, as it gets up into these higher prices. Oh, up 28 bucks today. You're at 5,034. What I do expect we're going to hit is the 5,116, somewhere in there, and that's where I expect it will fall apart once again. You get the number. It fell apart in August of 2015 rather, at 5,092. Then it fell apart at 5,116. So that's the number I'm looking for, somewhere in that 592 area. And the 92, of course, only 50 points higher than where we are. Gold contract. What do we have at gold? Gold contract out here today, folks, did 251,000 contracts. I believe that means that we have an ABC down, because I think it was 257, I think. Okay, so check it out. Pretty cool. So Tuesday, we came down to 1331. You did 257,000 contracts. We only did 251 today. So it's not an ABC down. It got over the 1331 again, so we'll see whether it can get into higher price tomorrow. Of course, Friday inside the gold market is dangerous, especially when you've come down 4 days in a row. You know, we started out the week at 1376. It's not down a lot. There's no doubt about that. But bottom line, you get 4 days down. Coming into a Friday, that is a danger inside that metals market. That being said, guess what? Silver will not crack. Silver got down into lower price today. SSI. Silver traded to $20.06. We've done 60,000 contracts. That's really a sideways move, staying at the highs with light volume, you know. So silver hasn't cracked. You know, we'll see if it, in fact, it does. My expectation is that it will. The notes. We go take a look at the notes. This is what you have with the notes. Now, the notes want lower price. The bonds want lower price. That sets up with the S&P and the Dow wanting higher price. We came down on Tuesday with 1.4 million contracts. We've done 1.2 million today. You're at 132.10. It looks to me like the 10-year will come back to where it broke out from on the 24th of June, which is 130.21. We're 132 right now. The 30-year, a little bit different, but bottom line, also had some good juice on the way down. You're down 2 full points. We're at $172.31 ticks. Next stop is down into the 171.01. And more than likely, what I expect, you're actually going to be down there tomorrow morning. Now, if we come down to those levels and we do see a slight expansion of volume, that would set up that the 30-year also wants to go back to the 165.25 area, which is, you know, a counter-trend move because the bonds still look like one higher price, but that's quite a move when we're talking about, it was quite a move in the way up. You know, on the 24th, we were at 165. By July 8th, we're at 177, you know, and it looks like it took us about 10, 12 days to get up, and it will take us about 5 days to get back into lower prices. King dollar. Now, King dollar is a wild card out here, folks. It's the wild card when you take a look at, number one, where it wants to go, why it wants to go, because if, in fact, King dollar breaks over this price point of 96.70, which is the swing high of the 24th, that is saying it wants to get up into the $99 area. It's 98.91, which was the high of February. That's where it broke down from, the last time it broke down. If, in fact, we break topside and we get up to that area, that's signaling two different things. It's signaling that more than likely we very well may get one rate hike in December. And what it would also do is say, okay, guess what? The commodity market would get hit slightly. You know, we'll see where that shakes out. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming back with some numbers. Dow Industrials closed up 134. You had the Nasdaq up 28. S&Ps are up 11. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit DirectionInvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and we take a look at the QQQ. So the Q's out here today, folks, traded up 76 cents. You're down 20 million shares. That is coming into the high volume swing of 42 million. So we've taken that out. You've taken it out on lighter volume. Bring this back and put it on the weekly chart, and what you're going to see is this. We got into the bar of where the downdraft started in January, and this is when we're talking about the composite also. This is where I'm suspecting the composite wants to go, meaning the top of that bar. The Q's are saying that it also wants to go to the top of that bar, which is going to be 114.54, which went 12, so it's $2.50 higher than we are right now. And, you know, we'll see where we get tomorrow, but that's how that's laying out right now. Because what we did is that you got over, and I have a weekly up right now. So on a weekly, last week we did about 120 million when you add in the July 4th. This week we're going to do about the same thing. Well, actually, no, it's going to do less. It's going to do 103 million if we do 20 million tomorrow. And, you know, you're coming into, well, what we're coming into on January 1st is light. It's really light. It's actually only 100 million, 96 million to be exact. You're also coming into 245 million. That is, yeah, that's the crucial number. And that's the same price point, too, by the way. So the week of December 18th, that's where we had started down inside the NDX as well as the NASDAQ composite. We went from 114 to 109, and that's still the number, though. That's where it wants to go. So it's going to take some patience here if you're going to sell this market. I suspect just be patient. Because what we have going here is this. Now, let's look at this calendar, because this is going to get really wild. So if you look at the calendar, we're July 14th right now. Next week, you have Microsoft come out with numbers. So Microsoft comes out on the 19th. So the 19th is Tuesday. Now, that being said, what ends up happening is that the Amazons of the world, Google, Facebook, they come out the 27th. And what do we know when you're talking about the end of the month? Well, you're talking about two different things. You're talking about the highly volatile stocks inside the NDX 100 coming out with numbers. And then on top of that, you're talking about window dressing, which would start the 28th. So the way this looks like it's setting up, it looks like that we could stay up to these highs right to the end of this month. You know, because what I can't picture is that you just finish this off next week, because you get those two small ABC structures on the way up, and the market fall apart at window dressing. You know, because what you're going to have, you'd have the momentum going higher, up into it, gets more people buying, gets people that are short buying back. And I suspect what that's going to be all about is that that's going to be all about the NASDAQ composite catching up with the S&P and the Dow Industrials as it tries to get into its high. Because the number that I'm looking for right now in the composite is 51.16. The actual high is 52.31, so it's only $100 over that high. The way that the composite set up is this. The composite got its high just a year ago, actually, July of 2015. That's 57.31. It tried to make the next high in December of last year at 51.76. Now, the number I'm looking for is the 51.16. So let's go over to the Russell We take a look at the Russell, because when markets go to highs or lows, they like to go in harmony. That's the other side of it. And if we take a look at the Russell, the Russell looks to me like 1225 it wants to go to. We're at 1202. The high is 1295. I don't see it getting up to 1295. You know, I just don't see it happening. There was there's a question in the den: is how does this compare to the summer moves of 2008? There's no comparison. The moves. What you had in 2008 is that you had. I just don't see a disaster like that coming. You know, I can see the market pulling back pretty dramatically. The difference in 2008, folks, is not only just the overextension of equities was phenomenal. What we had done here, let me bring this up so I can show you. What we had done is that you had already come down fast and furious and went back higher, and just as this time, we have volume that is contracting, but the contraction then was just amazing how light it was. And I suspect he's talking about 2007, the highs. Maybe he's not. Maybe he's talking about the... Yeah, because that's what we had done in 2007 is that your first leg down, you know, inside the SPY went from 156 and we went down to 137. The volume exploded on the way down. I mean, you talk about it just... And then what ended up happening is that it went all the way back and tested the highs again in October. And then forget it. And then it just let loose, you know. In 2 months, we had gone 137, back up to 157. So that's 200 S&P points. And then when it went downtown the next time, it just never came back. You know, you went from 157 down to 67, you know, with volume exploding all the way down. And what that had done is it got you all the way back to 2002, and this is what the mind blower is there, is that the 2002 level had a high volume swing low, which we wanted to test. You know, so I expect you're going to have more upside here. We are going to have volatility. If we take a look at the trend's getting lower. The trend's at 0.62 right now. And that's saying that the complacency is getting heavier. We take a look at the tick, and what we have with the tick out here, you had a plus 1163, and that came in at 3 o'clock. You're going to need a much larger plus. You're going to need a plus of about a plus 1,400. So what happens with the trend is that if we get down on a 5-day basis and you're dealing with something around a 3.5, when you add those up, that is when you're getting closer to a top also. And right now, we're not close to it. Yesterday, we came in at a 1. So what happens with a 1 is that it's saying there was much buying as there was selling, and there was much buying in all the equities, not just certain equities. So what happens when you get at highs is that the trend goes low, meaning it will come to a 0.42, 0.52. And what that means is that everyone that is buying are buying the exact same select equities, and then there's no one else to sell them to. It's ringing around the rosy, and then there's no chairs left. You stay right there, folks. We're coming right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to Apple and take a look at Apple. So Apple today caught a bid, folks. What that was about, well, of course, that was about buying. People were buying it. Why were they buying it? Well, Taiwan Semiconductor came out with numbers last night. In Asia, big numbers. They were talking about they are the makers of certain parts of for the chips for the iPhone 7. Today, Apple took out a small B point, took it out with volume. You're trading at $98.79. Now, the 8 point on this is the low that was established on the 27th. That's 91.50. Your B is 97.60. So you're talking about $6, which brings you to $104.84. Now, $104.84. Now, watch how this shakes out, because this is pretty cool. When Apple had When Apple had come out with their earnings the last time on the 26th of April, the low of that is $104.35. So the way this is set up right now, it looks like Apple will get up and into and try to test the gap from its downtrend, from its gap down the last time they come out with numbers. Now, what's really cool about this is this. When you do an ABC structure on the way up or the way down, most times that's all you do. Then you back down again, and you can do multiple ones, that's for sure. But when you get the price projection, then they like to back off. What also happens is that your volume dies because you can't go higher with volume on a continual basis or go lower. Bottom line, that's what retracements are all about. The cool thing is that in this particular case, even when we took the small B point out of an ABC structure up today in Apple, it only had 38 million shares, and it only needed that because Apple, the volume has been so light on Apple. That being said, guess what you're going into? What we're going into is 56 million shares, and as you finish an ABC structure up, you go into that, and then we're going to put this right on top of it, is that Apple's coming out with its numbers on the 26th. So what I'd love to see is I'd like to see Apple get up into those areas before the 26th. Because if you take this and we just put Apple back on a monthly basis, what you're going to see is that Apple's going to have a really hard time getting through this area of the $107 level. We came off the highs at 134, has a monster volume. In fact, it's all down volume, you know, because Apple had made highs on dramatically lighter volume. We made a high on a monthly basis at 990 million. Then you come off that high with 1.6 billion. You know, we're going right into that bar right now at the 1.6 billion. Now, that bar is a monster because when Apple fell apart in August of 2015, we went from 122 to 92. So that's the way Apple seems to be setting up. As we talked about in the last hour, is that the IBBs and indices that you want to keep your eye on, folks, and this is why. The consolidation, it's been a nice consolidation, meaning spread-wise, you know, $241, the lows, $289, the highs. Well, subtly, in a subtle move yesterday, IBB actually pulled back with volume. Now what it did today is that it rejected lower price, has lighter volume. How we come up and try to test out the 274 again will be crucial, because if, in fact, we test out the 274 and you have lighter volume, that is where I more than likely would basically sell right into that whole number there. That's the way that I'm looking at this particular point. We go over and we take a look at Facebook. Yeah, so when's Facebook coming out? So Facebook's taking over the earth. Facebook right now is up 51 cents. They're coming out on the 27th also. And Facebook is also in a high-end consolidation. Let's put this on a monthly. Okay, so we're at 117. Facebook had volume all the way up to 117.59. Get this a little bit closer and see what we're looking at. Yeah, so Facebook wants to go at least try to test 120. That's the way it's set up. And depending when it tries to do that, hey, guess what? You can gap that in a second. The difference between the Amazons of the world, not Amazon, Microsoft of the world, Google of the world, and Facebook is this. April, when Microsoft came out with its numbers, it gapped lower. Google come out with the numbers April, gap lower. Facebook come out with the numbers, gapped higher. We went from 106, opened up the next day at 120. You know, so the way that, so now I expect it wants to test 120, and, you know, we'll see whether you get another gap up. What is happening on a advertising basis? Well, let's just see this too. Okay, so Facebook takes in, okay, so Facebook takes in right now, and you talk about a growth, this is some growth. So check this out. In 2016, this year, they plan on taking in $26.1 billion. In 2012, Facebook took in $5 billion. 2013, 7.9. 2014, 12.5. 2015, 17.9. 2016, 26. And the difference between a Facebook and an Amazon is that Amazon is making money this year. Facebook has been making money every single year, going back to 2012. Maybe before that, I just have 2012 numbers in front of me. And this is what it was. So 2012, they made 53 cents a share. 2013, 88 cents a share. 2014, $1.77 a share. 2015, $2.28. It's going to be $3.60 this year, and they're looking for $4.68 next year. So you're talking about big numbers. And we'll see when Google comes out, is the Facebook effect affecting Google? And it very well could be, because the last time the search engines came, the search numbers came out in Google, those search numbers were not as large as the market was expecting. And what has happened, of course, is that Facebook can it's not that they can identify the client that you're looking for better. They absolutely have a better reporting system back to the advertiser, as well as the segmenting of the demographic that you're looking for, because of the fact that Facebook has everything on every one of us. If you go out on Facebook and you're posting, that's what it comes down to. They know where you are. They know what you're looking for. You know, I had a guy last night when I was just out, talking about saying, "Hey, I can't, I'm Googling something and all these ads are firing out at me." Well, bottom line, folks, just so you Google anything, and you could be on your laptop, you can be on a main computer, and guess what? As soon as you get back on your phone, those ads are going to be right on your phone. You stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at a few of the gold stocks. So you got Barrick Gold. Barrick Gold up 39 cents today. Now, Barrick is also coming out with its numbers on the 27th. And what will be interesting here is this, is that, Barrick has made a high, $23.47. It comes down with some big volume on Tuesday, gets down to $20.60. It does 33 million. Today it rejected lower price with lighter volume. That being said, this is what you also have happening here, though. and this is what's going to be important about where Barrick ends up this week. We made a high with 99 million. Barrick now already has 101 million on the way down. And the crucial thing, I think, inside of Barrick, which we're also dealing with, is this, is that Barrick is one of the larger, well, it is the largest gold mining equity. It's also one of the equities that George Soros and a couple other large players got into in a big way. Now, as they were getting into Barrick, bottom line, let me see where Soros got in. So, 331. Yeah, so they got in at the right price. So watch this. I'll bring this up here for you so you can see how this shakes out. So the filing was at 331. And what happens with a filing, folks, is this, is that means that they bought those shares in the first quarter. Right? Well, if we bring this back a little bit, what you're going to see, close right there. There we go. What you're going to see is that when we're talking the first quarter, you know, Barrick went from $7.50 and now we're 21. So the real question is, when I'm watching Barrick, is like, okay, you know, you have a large trader, because that's what Soros is, folks. He's an investor, but he's a very large trader also. He doesn't stay in anything for long periods of time, you know, if you're up 200%. Now, doesn't mean he sells everything, but bottom line is that it's awesome when someone like gets into your equity. It's a disaster when they get out. So we'll see where that shakes out. Barrick also comes out with his numbers on the 27th. Now let's go to the second largest weighting inside the GDX, and that's Newmont. And what we have with Newmont today, this looks bullish, and this is actually bearish in a huge way. Now this is where the deviant can come in the marketplace and also come in charting when you're taking a look at it. Now, if you're into candlestick charting, what this symbol is that it started out today at $39.93, and it moved higher all day long. That is a lost engulfing. What a lost engulfing is inside the candlestick charting is this. First, you need a big uptrend, which Newmont has had. Newmont in 6 months has gone from $16 to $41. Then what you need is that you need an equity to gap lower on an open, which it did, and make it all the way back up, which it did. And now what it's done is it has engulfed all the trading days from the July 5th. So in order for a lost engulfing to have a higher probability that that's what it is, we're gonna you'd have to have a lower low tomorrow. That's how this is shaking out. But when I was watching this, I'm saying to myself, man, this is pretty intense. That you have Barrick, you know, making it back from high volume day. Newmont doing the last engulfing. And if we do take a look at the inside, not the inside, the higher volume funds that where they're buying, where they're selling, it's pretty big. You know, BlackRock is in here big right now. I suspect BlackRock, that's more than likely going to be one of their ETF structures, as well as a couple of their funds buying into that. If we take a look at Newmont, Newmont also is coming out. Oh, that's coming out the 20th. That's cool. So that's next week. This is an equity that went from $15 to $42. We take a look at this. Yeah, this is ICE is set up. This is so wild, man. We're right at ICE. See, many of these are just right at ICE, even in the gold and silvers. $42 even. That's where we broke down from in April. It went from $42 to $31. Man, you talk about a breakdown. Holy cow. You did 231 million shares. Last week we did 189 million, on the monthly rather, on the monthly. So you did 189 million. You're going into 231. But that's also saying, though, that it can hit the $42. So we're right next to that. We go take a look at GDX. Let's go see what. So those are the two largest weightings inside the GDX. The third one is Goldcorp. We go take a look at Goldcorp. Goldcorp's having a problem. The high in Goldcorp is 2024. That was established May 2nd. You know, couldn't handle price, so it goes down to $16. Goes all the way back up, gets to 2034, 9.7 million versus 9.9. Then what do? We go lower today with 6.7. Now, what the difference is that Goldcorp has not rejected lower price out here yet. That's how this is set up. And it looks to me like, let's see when they're coming out with their numbers. They're coming out the 27th. Goldcorp should be, if Goldcorp was going to go higher, it should have been able to get more juice out here today. So it looks like Goldcorp wants to make its way down into this $17.71 area. Going to be tricky coming into the metals market tomorrow, though. Let's go take a look at one of the stronger silver stocks, and that's First Majestic. That is trading at $16.94, right at its highs. And this one's a toss-up, man. You know, bottom line, that saying it's a toss-up, you go like this. This is an equity that went straight up from $2.40 to 17 bucks. That being said, you take a look at this. We're at 16 bucks. 16.46, you're over that? You know, the way this is intense, man. So this is going to be a great one to keep your eye on, because what First Majestic does have is a high volume high that was established out here in 2011. The low of that high is 20, the high is 26. We got over the swing from August of 2013. We got over it, well, this month. And you're over it with volume. The next swing point on this baby is up at $24. That's a monster, man. You know, we'll see. The stock is extended in a huge way, but guess what? They can extend more. We take a look at Hecla. Hecla's just laying flat out here at 623. And Rheingold Resources, which is one of the stronger golds. You know, Rheingold was subtle today. It couldn't get higher. So Rheingold's also saying it wants lower price. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go over to Asia. Asia's going to be open in 5 hours. So last night in Asia, you had the Nikkei was up 0.7%. We had the Hang Seng up 1%. Shanghai was down. We'll start with the Hang Seng. Hang Seng is trading out at 21,561. And, yeah, it wants to go after that swing high, man. You know, we're right next to it. So 21,634 is game. Now, it's going to be cool because that's 22,000. Actually, this is going to be interesting to see how this shakes out, because when you look at the Hang Seng, it looks to me 22,424. That's a long way from where we are right now. You know, the swing point out here is 21,634. So we're going to go after that. The way this is laid out already, though, we've already done 7.9 billion shares, and the swing point only is 7.8. So if, in fact, we're going to get a lot of information out of the Hang Seng. So watch this, folks. You get one more trading day. I expect that we're going to take this out tonight. And if we take this out, that's an ABC up. So 18,200, I'm ballparking this. 21,000, so you get 3,400, which would get you 23,000. And right now we're at 21.5. Yeah, so that's a big heads up. And 22,000, that's where it wants to go. 22,836. So 23,000 is the ABC structure on the way up. And I suspect I'll probably take it out tonight. What you also have is that the downdraft from July of last year, which is a monster, is 22,830. Well, that's going to be an interesting one to watch out. But what it also does is it gives us an understanding of where we can go, meaning higher. We take a look at the Nikkei 225. Now that's dying on the vine. Yeah, so you know that's had a nice run. 3 days ago it was at 15,000. You're at 16,300 right now. I suspect it's going to go higher, but the volume is dying on the vine. We go over to the UK, and of course, the UK, new Prime Minister, all of the above, Brexit. UK gave it up on price and volume today. So what happened is that the Bank of England didn't go down on rates today, and the market didn't like it over there in the UK. So we'll see where that shakes out tomorrow. The DAX in Germany, what we have with the DAX in Germany, that is filling the gap. That was up $1.37 today. You're at 10,068. And the high that it wants to go after is the 10,340. The low of that high, to fill the gap, is 10,104. So the DAX also tomorrow is going to basically release quite a bit of information. So just to wrap up where I expect the market out here tomorrow is that the SPY's at 216. That wants to get up and hit 218. It's the small ABC structure up. The 8-point that I'm using, Mr. Kevin gave us a heads up yesterday, was that downdraft of the 27th of June. That's a small ABC. The larger ABC is not there because what happened with the larger one is that you went up on light volume, meaning if you're taking this all the way back to February, you went down on monster volume. What is there for an ABC up is using the low of the downdraft of the 27th, going up into the high of the 1st, and then taking that out on the 8th. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here tomorrow, 8 o'clock in the morning. Go get them, folks.